What is the difference between Rhode Island estate tax and inheritance tax? Have you ever wondered how taxes work when someone passes away? In Rhode Island, there are two terms that often come up: estate tax and inheritance tax. But what do they really mean, and how do they differ? Let's break it down. First, Rhode Island has an estate tax. This tax is applied to the total value of a deceased person's estate before any assets are distributed to heirs. If the estate is valued at more than approximately $1,800,000, it will be subject to this tax. The rates for this tax range from about 7.2% to 16%, depending on the total value of the estate. This means that the estate itself pays the tax, which can reduce the amount that beneficiaries ultimately receive. Now, let's talk about inheritance tax. This tax is different because it is imposed on the individual beneficiaries who inherit assets from the estate. The tax amount is based on the value of what each beneficiary receives and sometimes their relationship to the deceased. However, it is important to note that Rhode Island does not have an inheritance tax at all. This means that if you inherit something in Rhode Island, you do not owe any state taxes on that inheritance. So, what does this mean for estate planning? Understanding that Rhode Island only has an estate tax and no inheritance tax is essential. It helps in planning how assets will be transferred after someone passes away. For married couples, it is also important to know that the estate tax exemption is not portable between spouses. This means that they cannot combine their exemptions for state estate tax purposes, which is different from federal estate tax rules where spousal portability is allowed. Additionally, Rhode Island does not impose a state gift tax, but federal gift tax rules still apply. This includes an annual exemption and a lifetime exemption amount that individuals should be aware of when planning their estates. In summary, the Rhode Island estate tax is paid by the estate based on its total value, while there is no inheritance tax in the state. This distinction is vital for effective estate planning and ensuring that beneficiaries receive the maximum inheritance possible. Understanding these differences can help individuals and families navigate the complexities of estate planning in Rhode Island.